Hello, I'm Alex Davies, founder of Wealth Club, and today I'm with Alex Game of Unicorn Asset Management to talk about their AIM inheritance tax service. First off, tell me about the inheritance tax service. What does it do for investors?
So the Unicorn AIM Inheritance Tax Service really is an extension of the Unicorn AIM VCT. In terms of when we launched it at the start of 2016. It's still relatively small, so it's about 30 million in terms of assets under management, so steady growth over the time period since we launched. And in terms of what we're really trying to achieve for investors, first and foremost, clearly we're trying to provide mitigation of inheritance tax exposure for the investor. Clearly that is the objective of the product, so that really is the main focus initially. Beyond that, we really believe that the tax agreement really is a agreement between the underlying client and HMRC. So for us, as the investment advisor, that really does allow us to focus on selecting the best companies for the portfolios. In terms of what makes it different, I would say that we really do try and find our ideas further outside of the largest companies on AIM. So many of the companies within the portfolio, they may not necessarily be household names, they may not be well recognised, but we do have a huge degree of conviction in the long-term investment case.
And tell me about Unicorn and also a bit about your own experience.
So Unicorn Asset Management, we are a independent specialist UK fund management business. We take a very traditional approach to investing, so a very long-term investment horizon. All portfolios are very high conviction, built from a bottom-up stock picking basis. In terms of Unicorn, our product range, we have a small range of open-ended products, a large AIM VCT, and an AIM IHT portfolio service.
In terms of your own experience?
My own experience, so I've been at Unicorn for 6.5 years now. I'm a fund manager on the IHT portfolio service, but also a fund manager on the Unicorn UK Growth Fund. I'm also heavily involved with the Unicorn AIM VCT and some of the other open-ended products at Unicorn. I think, just in terms of the length of time I've been at Unicorn, 6.5 years, I was actually the last change to the investment team. So it really does show the stability of our investment team at Unicorn.
So let's talk about the types of companies you invest in. What are you looking for? What are the characteristics?
So I've already mentioned that we do find the majority of our ideas further down the AIM market cap scale. That's for a number of reasons really, but we do tend to find that valuations are a bit more attractive when you move further away from those largest companies on AIM. In terms of the characteristics that we look for, it's really the same philosophy that underpins all of our funds at Unicorn. So we're looking for either genuine market leaders or companies which may be innovative disruptors in their given niche or sector which they're operating in. In terms of the characteristics we look for, we really do have 4 key elements of our investment appraisal. So the first is financials. We only invest in profitable businesses. We like companies with very strong balance sheets. Cash generation is hugely important. In terms of the underlying portfolios that we offer, so we do have 2 different options of portfolio within the Unicorn IHT service, a growth portfolio and an income portfolio. Clearly that cash generation does underpin a strong level of dividend income. That helps us pay that income back out to investors throughout the income portfolio. Within the growth portfolio, strong cash generation really does help self-fund a very attractive organic growth profile. So that's very important for us. In terms of the other factors that we look for, we do an analysis on the company's end market. Is it stable? Is it growing? Then we look at the company's market position. We like to invest in either genuine market leaders with a strong competitive advantage or innovative disruptors who are winning market share through a superior product offering to perhaps larger incumbents that maybe haven't invested in customer service or product in recent years. Beyond that, we're looking at the company management team. We like to see management teams who have had a very strong track record of meeting or beating financial expectations and who are also aligned with shareholders typically through equity ownership. So we really do look for that alignment of interests with ourselves as equity owners within the management teams.
Are there any red flags?
In terms of red flags, I would say we do look at various different things. From an ESG perspective, we've integrated that into our investment process recently. So clearly certain ESG controversies would be a red flag. We tend not to invest in oil and gas or mining stocks, so they are excluded from from the investment case at the initial point.
And are you finding plenty of opportunities currently?
In terms of the opportunities at the moment, clearly market volatility is always a bit painful to go through as an investor, but every cloud has a silver lining, and we do find that we find many opportunities throughout periods such as the one that we've been through where markets are particularly volatile. I guess one example of that is a company that we've recently added to the IHT income model portfolio. So this is a company called Alpha Financial Markets Consulting. It's a company that we know well. We've invested in it within the IHT growth model portfolio for a number of years and within the Unicorn UK Growth Fund. So this company offers consultancy services to asset managers, calls many of the largest UK asset managers its clients, has a very strong market position within the UK and is also growing very quickly overseas. So this really is more of a growth business, we feel. It's typically traded on a slightly higher valuation, slightly lower dividend yield, but really as a result of the market volatility over the past few months, it provided us an opportunity to initiate a position in the IHT income model portfolio at a relatively attractive initial dividend yield of about 3.5%. So clearly quite a compelling entry point for more of a growth company, we feel.
And any other recent investments you've made?
In terms of recent turnover, portfolio turnover has been relatively low. That would be the one of note that I would pick out.
And what about longer term holdings? Anything you're excited about or has done particularly well for you?
Yeah, in terms of long-term holdings, we do, many of our portfolio companies within the current model portfolio we've invested in since the start of the IHT portfolio service. So we've owned for a number of years now. And beyond that, we've owned them in many of the other unicorn funds. So we really do feel as though we know and understand these businesses very well. I'd pick out one particular example called Frontier Developments, which has been a very strong performer, both in the IHT growth model portfolio, but also in the Unicorn UK Growth Fund, where we also hold this stock. So this is a video game developer. The market cap has grown from less than 90 million when we invested in 2016 to close to $1 billion now. It's grown profits from under $1 million to about 32 million today. So clearly it's delivered some exceptional growth over that time period. We've been very lucky to have plenty of time meeting the management team. So we've met the management team twice a year for the last 7 years. So I really do feel as though we know this business very well. I think in terms of the sector that it operates in, the global video game sector is big and growing. It's about $160 billion in total, growing at very attractive rates, double-digit growth rates year in, year out. So clearly the structural drivers within that end market are very attractive. Also, part of the attraction for us within this space and this company is the evolution of business models within the video game sector. So moving away from the traditional physical disc sales 5-10 years ago, which were much lower margin, to more of a software-led sale. So that has an immediate upfront margin benefit for the video game developer, but perhaps more importantly, it allows the developer to continually release high-quality content, and that essentially allows them to engage with the client over a much longer time period and allows them to monetize that relationship over a longer time period. So when we invested, this company had one successful game franchise. It now has 4, has a very, very exciting pipeline ahead. So we really are very positive about the growth prospects for this business.
And how's the pandemic treated you and your investors?
So the pandemic has clearly been a very challenging period for companies all across the UK. We're very fortunate in that we have very good corporate access, so it really does help going through periods such as this, being able to speak to company management teams regularly, hearing about what actions they're taking and how they're adapting to changing conditions. And I have to say we're very grateful for the way our company management teams have responded to not only protect the business in terms of revenues and profits, but also to keep the staff safe, keep customers safe throughout this period. In terms of the underlying sector performance issues during the period, clearly there are certain sectors that have been impacted more significantly than others. Those sectors such as retail, hospitality, travel and leisure really have been in the sweet spot in terms of the lockdown restrictions that have been brought in to tackle the pandemic. So really what we've seen in terms of underlying portfolio drivers is those sectors or any companies within those sectors really has been hit quite hard in terms of the lockdown restrictions that have been brought into place. On the flip side, in terms of the IHT growth model portfolio, part of what we look for are companies that are exposed to long-term structural growth drivers. So there is a fairly significant weighting to technology. I've already talked about one of the computer game stocks that we invest in that portfolio. We do invest in another one. So many of these digitization trends have actually been accelerated by what's happened over the past 6 or 7 months. So we do feel that the future is still relatively bright for a large portion of the portfolio.
One trouble with IHT portfolios, if you sell a stock and you're out of the market, then you can negate the IHT benefits. So when do you sell something? What makes you sell a stock?
Yeah, so ideally, as long-term investors, we really do want to own this stock for many, many years. When we decide to pull the trigger and initiate on a position, it really is under the assumption that we will own this stock for many years. But clearly there are certain conditions that will prompt us to review that position and may lead to an exiting of that position. Ideally, we would have a stock waiting in the wings so we can reinvest that cash very quickly into a new idea. Or otherwise, we may choose a handful of companies which might have underperformed on a short-term basis and might present an attractive trading opportunity. So I think that's really important, and really does speak to how we manage the portfolios. We are active managers. We are looking at these stocks, these companies on a day in, day out basis. So it really does provide us with the insight to be able to reinvest that cash quickly into companies that we think present relative attractive short-term valuation opportunities. And just in terms of our portfolio turnover, it is very low. I've already talked around that already, but in terms of the number of companies we invest in across both the IHT Growth and the IHT Income model portfolio, there's 40 unique investments. 27 of them we invest in at the inception of the portfolio service. So nearly 70% of the portfolio has been stable for many years now.
And how risky is it investing in AIM?
So the way I think of risk on AIM is the same as any other equity risk. Clearly, investing in equities does come with risk. We've seen that this year. When markets are going up in a straight line, it's quite easy to forget the risks of equity investing. But so periods such as the one we've been through this year, and indeed in Q4 2018, 2016, do serve a useful reminder, I think. In terms of AIM specifically, we really do feel that AIM has improved markedly in terms of quality over the past 10 years or so. So even if you look at 2012, in terms of the sector weightings on AIM, there would be 70% in oil and gas and mining stocks. Clearly those sectors are fairly volatile, quite speculative. Fast forward to today, that represents less than 10% on AIM. That weighting has been replaced by the likes of consumer goods, technology, business services, financials, so clearly more stable and diversified sector weightings. In terms of the underlying constituents, there are far fewer companies on AIM than there were, say, 10, 15 years ago. The companies that are listed tend to be larger, they have much more meaningful revenues and profits, and also when you look at the number of dividend payers on AIM, that really is a true indicator of the underlying operating health of some of these businesses. There are many more companies paying dividends on AIM today than there were, say, 10 years ago. So I think in terms of the proportion of companies paying dividends on AIM in 2019, it was 35%. If you look back in 2012, that was 26%. So it really does show the improving trend there.
And finally, if someone decides they want to invest in a AIM IHT portfolio, why should they choose Unicorn?
Well, I think I would just like to make it clear we're not tax efficient investors. We are a boutique specialist UK small cap stock picker. And I think that expertise really does lend itself very well to this space. It also allows us to identify opportunities which are highly differentiated when compared to some of our broader AIM IHT peers, which may focus further up the AIM market cap scale. So despite investing in many names which might not necessarily be well recognised household names, we feel as though we know these businesses very well and they offer a very powerful diversification relative to some of the other AIM IHT providers.
Alex Game of Unicorn Asset Management, thank you very much.
Thank you, Alex.